show some sample research reports and financial models. So, what is banking domain knowledge? Banking domain knowledge is the body of knowledge about how the different banking segment operates between customers, sales, distribution, product services, people, process, and technologies. And the banking term can refer anything related to retail banking, investment banking, and the private banking. So, what is investment? Okay. So, investment is an asset or item that is purchased with the hope that it will generate some income in the future. For example, I have money, like I earn 10,000 rupees every month. So my spendings would be 5,000 and I'll be having 5,000 left with me. So if I keep that money in my account, it will not generate any income in future. So what I'm going to do, I'm going to I'm going to invest that money into something like stocks or bonds so that it will generate some payoff in the future. And that asset could be anything like time, money, or effort. So we can say that investment is a mechanism which is used to generate future income that includes bond, stocks, or businesses. Majorly, there are three types of investment: cash, stocks, and bonds. But further, we can classify it into seven categories. So we are going to discuss about all the seven categories. So cash, we all know that we can invest our cash into anything like gold. We can buy some gold, or we can save our money in saving account, or we can do the fixed deposit, and it will give the interest in future. So this is what the cash. And then we have stock. Stock is an investment into a company. So if we are purchasing a stock of company, so we are buying the share of that company. We will be holding the share of that particular company. And if the company grows, if the stock price will go high, then we'll be having some profit in future. So that's called the stocks, and they have very high risk, and uh, and the return will be high too. Okay. The third type of investment is bonds. So bonds is basically a loan to a company. Uh, like like it's like the company is borrowing money from the clients, and they are going to give a contract or a document to that person. That's called bond. It is given for the fixed amount of time, and the interest rate will also be fixed. And in bonds, there will be very less risk and also less return. Then we have mutual funds. So in mutual funds, we can like make the large investments. So for example, I'm a person, I don't know about investment banking. I don't know about stocks or exchange. So what I'm going to do, I'm going to go to a fund manager or a professional manager who knows about the investment bank, and I'm just going to give my money to that manager, and they are going to decide in what type of investment they are going to invest the money in. They can buy stocks or bonds, and at the end I'm going to get the profit. Then we have index funds. So index, basically, there are many stocks in the stocks market, and these stocks are mapped with indexes. If anyone heard about S&P 500 index, so S&P 500 index will include many stocks in it. So you can either buy a stock, or you can buy an index. You can invest in index. So if the stock price will go up or down, so that the price will also fluctuate according to that. And in mutual fund, you have to pay a annual fee to invest, and the index fund, the annual fee will be much lesser. Then we have exchange traded funds. So stocks are mapped with indexes, and and stock both are mapped with exchange. So it is also same as index fund. When the price of index and stocks will fluctuate, same will happen to exchange traded funds. Then we have options. It is same as bonds, but in bond you don't have any option to uh, buy or sell the bond. But in options you will have the option to buy or sell your contract, but after a fixed amount of time. Like it will be a fixed tenure for that. So these are the types of investments. Investment banking. So investment banking is a division of bank or financial institution that serves government corporation by providing underwriting mergers and acquisitions. So the major work of the investment banks would be underwriting mergers and acquisition, and these services they provide to corporations and institutions. I'm going to cover these underwriting mergers in the next slide. So you can say that investment bank work as an intermediate between the investors and the corporations. So investment bank can be any type of bank. Like they can be sell side, they can be buy side, they can do anything. Like they can do the sales and trading. They can do mergers and acquisition. But a full service bank will offer all these services: underwriting, mergers, acquisition, sales, trading, equity research, asset management. So underwriting is basically capital raising. We can call it as a capital raising. So, for example, I am a small I have a small firm. Now I do the trading. I do the trading of my stock, but now I want to go to public. I want to go to public to the exchange. So I'll have to go through with the IPO process, which is called initial public offering. With that, with the help of that process, I can make my stocks available to the public in the exchange. So this service is provided by the bank. If I want to go to public, so I'll have to contact the investment bank, and they are going to handle all the process from starting till the end. Then we have mergers and acquisitions. So mergers and acquisition also conducted by investment bank. So for example, company A wants to merge with company B. So they will contact the investment bank, and the whole process will be conducted with the help of investment bank. So they will handle the whole process, either it's merger or acquisition. Then they have sales and trading department. So what this group will do, they will match up the client to the corporations. They will match up the buy side client to the sell side client. So they work as an intermediator, and they give advisory services to their clients also. Like they will recommend which stock they need to buy or they need to sell. Then they have equity research department. This department will work on the stocks. Like for example, I am an analyst in the investment bank, and I have a good knowledge of banking sector, or maybe a food sector, or maybe a crude oil sector, anything. So I'll be covering some stocks in that particular sector. For that, I'll have to I'll have to I'll have to create some research on those stocks, and according to those researches, my clients are going to decide whether they are going to purchase the stock or they're going to sell the stock. Then we have asset management group. So they manage the assets of any company. They work with like they manage the large amount of assets, large amount of stock. So who are the players in the corporate finance? Now I'm going to explain where this investment bank comes in picture. So we have the corporate clients on the left hand. These corporate these corporate client can be a firm, or can be a corporate firm or tech firm. Then we have institution on the other hand. these are the people who have all the fund, who have all the capital. So we are calling money as capital. I'll explain why we are calling money as capital. So they have all the capital. They will provide the capital to corporates, and in the exchange of that, they will give some bonds or share to the fund managers. Now all this is conducted by the investment bank. So here the investment bank will come into the picture. What they are going to do, they will deal with the corporate clients and the institutional clients, and they will match up both according to the risk and return factor. So this is the primary market, and we call the investment bank as sell side, because here it is working as a sell side, and the fund managers are buy side. Then there are secondary markets. So for example, there's a fund manager of corporation who wants to sell their stocks, and on the other hand, we have the fund manager of buy side who wants to buy the stock for the clients. This this uh, um, this trade will facilitate on a stock exchange. Sorry. This trade will facilitate on the stock exchange, and the investment bank will work as an intermediator. So they will match up the fund manager of sell side, and they will match up the fund manager of buy side, and the trade will be facilitated. These are the basic terms which are used in investment banking. Asset, I've already explained. Asset is an item which is a item of property owned by a person which have some value, like money. Money can also be called as asset. Bond is a loan to a corporate government for a defined period of time, and it gives fixed interest. Then we have capital. Now we are calling money as a capital because money is used to purchase things, and it lost its value. But capital for capital, we are using it to generate some wealth, like the money will be given to the corporates, and it will generate more wealth in future. So that's why we are calling it capital instead of money. Then we have commodities are like gold, raw materials like gold and coal. Financial instrument, it is a document which represent the ownership of an asset. We can call stock as instrument also. And inflation is, it is an increase in price, which means that the purchasing power of money falls. So how the purchasing power of money falls? Like I have a stock which has a price of $50. So if in future the price of stock will increase to $80, so I'll be having the benefit, but the purchaser money will fall because they have to pay $80 to buy a stock. So that's called inclination. Then we have IPO process, initial public offering. So the first sale of the company shares to public, and also known as stock marketing listing. So any company who wants to go to public, they will have to go through to the IPO process. Then we have liability. It is like loan. It is like a loan, like a company debt that is arising during the business operation. Liquidity is how quickly an investment can be turned into cash. So mutual funds are considered as much liquid, and bonds are considered as like less liquid because they have a fixed period of time um, from which they are going to get the return. LSE is Stock Exchange, the primary stock exchange in the UK, and it has 350 companies from 50 countries. Penny stock is a stock which costs $1 share, and it is very liquid. Share index, it is like the index of a share, and the share is also same as stock. Then stock is share and equity. We can call it share and equity. Wall Street NY Stock Exchange. I guess everyone is aware about Wall Street. It is the biggest stock exchange market in New York and the historic headquarters of the largest US bank. Now, yield is the income return of an investment. So, like I've given the example, like my stock, I've purchased a stock of $50, and in the future it will cost $80. So the income which is returned to me is yield, and it is like calculated with by the formula, and it is expressed in the percentage. Exchange traded fund, already explained this. It is type of index fund, and they track the benchmark of index to mirror the performance of an index. Now these are the top 10 investment bank: Goldman Sachs, JP Morgan Chase, Barclays, Bank of America Corporation, Morgan Stanley, Deutsche Bank, Citigroup, Credit Suisse, USB Group, HSBC Holding. So I have like in my previous company, we have worked with HSBC, we have worked with Citigroup, we have worked with the DBSP client, we have worked with Bloomberg client. So there are many investment banks, but these are the top 10 investment banks in the market. Now, what are the skills required for an investment banking to work in an investment banking? So these are the skills: financial modeling. So an analyst must create or prepare a financial model on the stocks which they are covering. So in the financial model, they will be having so many financial items based on the years. They'll have to create the whole the like the complete data set of from past 2 3 years, and the actual data set of current year, and the forecast data set of future years also. So they will create a financial model for each stock. Then they have business valuation. So they have different valuation techniques to evaluate their businesses. They have to create pitch books and presentations, so that like they have to create the presentation and pitch books from the scratch, so that they can go to the client, and they can convince their clients to invest the money into the stocks they are covering. So pitch books are like sales documents. They're having overview about the company, the bullet points, the main points, like how did the company have performed in the past years. Then there are transaction documents. They have to prepare many type of documents like term sheets. They have to prepare the regulation compliance documents. And the most important skill which is required is relationship management, because like they will have to manage the relationship with the previous clients also, uh, like uh, like the previous clients who are investing their money into their stock. So they will have to maintain the relationship, and also they will have to like have some new clients also. Then there's sales and business development. So they work as a sales and trading. They match up the buy side client to the sell side client. Then the second most important skill they should have: negotiation, because they will have to negotiate between the buy side client and the sell side client, so that buy side client can have profit in future. Like they will negotiate on the stock value. These are the job titles. We have analyst, then associate. Associate can also call as senior analyst. Then we have vice president, director, managing director, head or vice chair. Now come to the point: buy side, sell side, and Chinese wall. So I've already explained buy side and sell side. Like buy side refers to a firm that purchases security, and sell side refer to the firm which which sell or trade their securities. So for an example, I have a firm. I have a very small firm, and I want to raise my money to create a new factory, or a big factory. So what I'm going to do, I'm going to contact the investment banker that I want to raise my money. They will have to prepare some marketing strategies, They will have to prepare some marketing documents, and with all those documents, they will go to the market. They will go in the exchange market. They will go public, and here the buy side will come into the picture. So on the buy side, there will be fund managers who are looking for stocks to invest in on the behalf of their client. So the buy side investors, the buy side fund managers will contact to the investment bank also, and they will match up both of the side, buy side and sell side. These are the roles of sell side and buy sides. In sell side, advise the corporate clients on major transactions. They facilitate raising capital, including debt and equity. They advise on mergers and acquisition, and they also help in winning the new businesses. They create the liquidity for listed securities and provide equity research and coverage. They also have analysts who do the research and coverage on different stocks, and they also perform the financial modeling and valuation. On the other side, in the buy side, they manage the client's money because they have the clients who have funds, so they manage the client's money. They make the investment decision based on their research. Like they will make the decision on it, like which stock should they buy, hold or sell, and they earn the best risk adjusted return on capital. They will do in-house research and investment opportunities, and they will also do the financial modeling and valuation, and they will help their client to grow their asset under management. So Chinese wall. Does anyone have any idea about Chinese wall? It's not similar to the Great Wall of China. Anyone? Okay. So we have a full service investment bank. So in a full service investment bank, there will be there will be a department who will be working on mergers and acquisition. And there will also be a department who will be the buy side, who will be buying their stocks on the behalf of their clients. So the whole process works together, but there's a Chinese wall between both of the departments. And why this Chinese wall is necessary? Because, like for example, if the merger and acquisition department are discussing about something, like if company A merged with company B, so their stock price is going to raise. Like if the stock price is $40, so if the merger happens, their stock price will reach to $80. Okay, so if this information can go out to the buy side, so the buy side analyst will know that this merger will happen and the stock price will increase in future. So they're going to do, they're going to buy all the stocks of that particular company. So this is the obligation. This is the so they are working in the same investment bank, but they're not allowed to share the information about anything from both of the department. So that's why we call it Chinese wall, because the information transfer cannot happen. Now these are the tools used by the buy side analyst. I have worked in the buy side tools on only, so I can only explain those. So we have Winword. So in Winword, there are add-ins. Like you can click on the add-in and log in with your credential, and you will have to select the stock on which you want to generate your report. So in the Word report, there will be many functions which will fetch all the data from database. Okay, and it will generate a Word report. Okay. Then the second tool is Excel models. So it is same as Microsoft Excel, only the add-in will be provided. So you once you log into with your credential and open the financial model which you want to upload. So once you upload the model, all the data will go to the DB for that particular stock. Then PowerPoint, in PowerPoint also there will be a add-in from which you can generate a PowerPoint report on particular stock. Then there is research author. Research author is also it is a web application and it is also used to generate the report, but only the HTML report. So if you want to generate HTML report, you will have to log into research author and create the report. Then we have ADBMS. ADBMS is a Windows tool. So it has all the database access you can access with the ADBMS, because it is not it is not good to give the database access to the client, because even a single digit can do so many changes in the report. So we have provided them the ADBMS tool, from which they can create new formulas, financial formulas. They can change the values of any year or any particular financial item from front end. Then we have research compliances. So research compliances is basically, there are some compliances or regulation are done are done by the government on particular stocks. So if one analyst is creating a report on particular stock, so they will have to drop a disclaimer about that stock. That's called research compliance. So they will have to you must have heard about the disclaimer of, like, whenever you watch anything, any serial or movie, so there are disclaimers. So they will have to also drop a disclaimer in the report for the research compliances. Then after creating the report, analyst will submit the report and it will go to the workflow approvals in the dashboard. So I'm an analyst. I have submitted the report. It will go to the senior analyst. He or she can approve the report, or it can roll out the report to roll back to the report to me also. Like, they can either approve or either reject. And once the all the stage approval happens, the report will go to the distribution phase. So once the report will get published, it will distributed with the help of emails, with the help of social media, with the help of research portals. So it is the moment we publish a report, it will send to our clients based on the rule based integration. Then we have readership intelligence. Anyone know about readership? Okay, so readership is like, I'm an analyst. I have published my report. Now, how I'm going to know that how many people have read my report? I have published a report over the portal, from the email or in the Twitter. So if readership intelligence is included, because to manage the count of reports, like, if one person is opening my report from portal, the readership count will increase. If one client is opening my report from the email, the readership count will increase. So this is called readership intelligence. Then we have research portal. We have given the clients research portal access. If someone don't want to get if someone don't want to get the report from email, they can directly log into research portal and view the report. And we also have included social media engagement, like Twitter or Blogspot. There was something. So the report will go published to social media as well. And this is the research report sample. This is the investment bank, and this is the stock on which the report is generated. These are the financial items. This is pie chart, and this is the chart of index and the stock. And this is all about the company, like the stocks which we are publishing a report. And we have recommendation on the top, like, it should be buy or sell. And the target price is when the market closes, the price at the time where the market closes. So this is called target price. In the closer look, target price and recommendation. So recommendation is overweight. That means the client should buy it, and we have included price target also. Then we must have interesting headline for the reports like this. And this is the stock versus index graph. This is the stock graph, and this is the index graph. So we can see the fluctuation with the help of graph. This is report summary, and this is stock data. And this is the financial model which they upload. So they have different years. They have different financial items and the data which they have calculated. So they don't have to calculate the data manually, because in both Word and the Excel, the automation was done using macros. So once you open this Excel model on Bloomberg site, so all the data will be fetched automatically with the help of those functions. So this is the financial model which they upload. Thank you so much. And if you want to know more about investment banking, you can visit the CFI website, where you can watch the video or read out the content.